All right, Matt Davio back again with Greg Simmons at Scope Labs at Mistrade. Look us up on the Twit stream if you guys aren't following us, the Twitter stream. Greg, we're sitting here 11:96 after the close here, August 4th, 2:30 Pacific time. We're recording this. My friend, we finally got a little perk up in volatility. We've been talking about it. But before we get to that, you've been posting a lot of quotes. The one you had today by one of my favorite writers, authors, Livers of Life, Hunter S. Thompson. And I've always said, I was saying to my friend Warren today, he actually brought it up. He said, you know who Greg reminds me of? Greg reminds me of a trader's Hunter S. Thompson. And he was absolutely right. And your quote today from Hunter was, what passed for society was a loud, giddy whirl of thieves and pretentious hustlers. A dull slideshow full of quacks and clowns and Philistines with gimp mentalities.
Yeah, I substituted society for CNBC actually on that because my new fascination. I have it going on in the background again. It's become like one of my most embarrassing things is that I actually turn on the volume here and there too. I mean, I leave it muted, but I heard their promising me that, I couldn't win, and Goldman Sachs and everybody saying that volatility would never come back and people were shorting it. And, as we know from the previous clips that we've done, I've been long the January VXX call. So I'll do my tiny little brag right here, right now. I'm flat. I came into them. I started a little early, probably 25. I bought it down into the teens. I just loaded up the options. And I'd done some writes against it. Then I quit writing and just said, I'm just going to roll the marbles, and this is it. This is going to be my kiss off. I give up on these, fake derivatives. I've been a hypocrite because I trash these ETFs, and then I go out and I trade them because I couldn't figure out a way to be long volatility. There's only two ways.
Give us an idea, just go back a little bit. When did you start buying at 25? How long ago?
When it was 25 on its way down to being a teenager. It's made a few round trips along the way, and I was able to write some 1 week contracts against it. But at the end of the day, I ended up getting, a couple hundred contracts, and I ended up making great money in the thing today, and it's banked, and I've closed down that account. I put the whole thing in 90-day T-bills, and I've just walked away from, I don't even know that I'm turning off my eye candy for the S&P. I posted on Twitter 2 days ago, you can go look, before we broke 1285, I said, if we take out 1285, we're going to go down to 1192. I mean, I put it, it's time stamped, go look. I mean, it's not, I'm not making up a story here. You can independently verify. And I made the call, and we got it, and I got paid, and I'm done. And, I can sit and brag about that, but at the same time, let me be crystal clear. I'm just getting mangled on my short government, and I don't mind. And I can tell you why I don't mind, because I'm going to stay and I'm going to add.
You and I have talked about this infinitum offline about the treasuries, and you've got some spreads on that have been doing well for you and that are a little bit more complicated than we have time for here and our viewers. However, basically, I've been saying, and I've said this to you, I've had no position really long-term on the treasuries more than trading-wise, and I've had no position in gold. And I will say to you right here, and I've been saying it loudly the last couple of days, I had no position in gold until today. I did put on, when it finally broke today with everything else, I said, you know what, I'm going to place my bet. Treasuries are right, and for now, and the gold is wrong. Gold's got to go lower right now with everything else, everything. So I think gold.
I'm still long my physical gold and silver. I flirt with hedging it, but it's been going up with the treasury, so it's been largely hedging my mark-to-market beatings. Let me be crystal clear. I'm just getting run down with the truck. I mean, I'm short the 2 years outright. Forget all the 1030 and all my trading stuff, which has also helped offset the mark-to-market beat, but my core position is net, short 2 years. I have good company, Michael Steinhardt, and some other smart money that I actually respect. That just is good luck because I was just doing it anyway. I just think that, the best analogy, and I was just kind of thinking it through myself. When you bring up gold, here, I have a Byzantine, This is, 500 AD, a Byzantine gold coin. I mean, I have, gold's been money for a long time. I just think that if they sell all asset classes, you'll have margin calls. This Paulson guy is, I think, I've gone on record say this guy was a one-hit wonder with the subprime, and I think he was fed some inside information. And, I think you got some sweetheart deals. And, everybody thinks I go trash rich people. I bow to George Soros, the communist. I bow to Jim Simons, the best quant. I bow to Jim Rogers, who says he's not a good trader, and he's a great trader. He's a big liar. And, the guys that are great, I give all the props to. It's just Warren Buffett and this Paulson guy. I just don't believe it. I just, these guys are just, one-hit wonder sort of things. The premise I have on the governments, and it might work for you on the gold, short term, I might take a beat in it, but the best analogy, I guess, is we have 10 guys, we have 10 friends, right? And we have a poker game, a friendly poker game. Now, there is no such thing as a friendly poker game. Anybody that says there is a liar. Because I've seen fist fights break out over AC-doocy, all of a sudden it turns into junk poker. I've seen people bloody themselves up. I've seen more fist fights during AC-doocy when somebody posts. But let's be clear here. Everybody shows up to your house, Matt. We're going to make you the villain in this, okay? And everybody goes and buys, $1,000 in chips. I've got all these valued chips around. So everybody gets $1,000 in chips. There's $10,000. I think I have money out here. Okay, so there's $10,000 in cash in the pool, okay? So at the end of the night, Matt, you're the banker.
Right.
You have to pay out. Somebody ends up with the 10 grand. Let's just say that, the poker game is a freeze out. And somebody ends up winning. There's got to be $10,000.
Right.
What the government's doing with this debt ceiling and stuff, I'm incredulous that the Treasury market continues to do this parabolic run at the same time that the quality of their paper continues to decline. So it would be the same thing, Matt, as you saying, okay, I'm the banker. You run out of your $1,000 in chips and you go, you guys, I'm back in. You just surface with, oh, by the way, I still have chips. I have chips. I got plenty of chips. I'm back in the game. And so, that's what the government's doing is they're just coming forward and saying, I got more chips. Well, at the end of the poker game, the cash is not going to settle up with outstanding chips. Right. So, your credibility as the banker and the host of this game is going to become dangerous. And everybody talks about Japan. Yen, what do they call it? Yenvation or yen? People are talking about all these things. Listen, here's $50,000. Is this $50,000 real? It's all chopped up. It's all in a little thing. It's fake. It's what? People are going to come over to your house with guns and knives, and they're going to blast you for. They're going to come get you for robbing them. Now, I think if you're China or Japan or India or Russia or England or anybody else, we're the largest debtor nation in the world. And I'm not buying it. You went and got more chips. We raised the debt ceiling. You said, hold on. I'm going to go get some more chips. Yeah. You can't just keep bringing more chips to the game. At some point, there has to be a convergence of the bills being paid, of the game has to settle.
Now, I asked you again before we came on air about the Getty, there's a couple Getty museums in SoCal, and the one on Malibu on PH Highway. And
yeah, it's so beautiful.
They have a little back room in that smaller, older museum. Smaller, it's huge, but it's the older museum. But in that,
I drunk and almost fell in a fountain there, I think. But okay, it was a black tie thing. I got loaded there.
That's a good food. That's a whole other story, which we are going to talk about in a future video, by the way, my friend. But getting, there's a room. Again, it's probably a 200 square foot room with currencies going back 5,000 years. And what was fascinating to me was not so much the fact that currencies went back that long worldwide, and they were mostly gold and coins and silver and paper and those types of things. But what's fascinating to me, what really fascinated me was the amount of hegemonies I think you saw in the Roman times. how many different currencies, and they were flipping currencies, and the pace, when you consider how slowly money traveled in the Roman times from 500.
The Roman Empire didn't end up so good, right?
Right. Of course.
Right, it ended poorly.
That's the analogy, but the interesting thing was how many different, basically, fiefdoms and kings that were out there collecting all these different taxes at the same time because money didn't travel and circulate the way it does now. But then I read an article this week, Greg, talking about, again, basically taking currencies back to that period of time. No fiat currency has ever lasted. And the average, the median number of years going back 5,000 BC is what do you think?
Jeez, I don't know. You just set me up so good because sitting on my desk, I always have a history of money. I have the Queen Elizabeth dollar. I have, as a matter of fact, I have the Spanish silver dollar. I've got the Queen. I've got the first U.S. one. I've got, this one's cool. This is the, original, Victoria. Yeah, that one's cool looking. But here, I actually have a 600 BC Roman Alexander the Great coin. I leave these out on my desk to remind me that money is actually money.
Right.
That money was. So the answer is saying that this money is not.
Yeah, the answer, and I think I read it in Washington's blog. I don't know if you read his blog, but I think it was 40 years. 40 years, Greg. And guess what? The last time this country basically started over was, you want to put a guess on when that happened?
I'm going to guess 40 years. What was the Buttonwood? When did it?
Yeah, 1970 when Nixon decoupled from gold.
Nixon was the biggest monster. He's the one that did us. Him and Greenspan and Bernanke's irresponsibility of being the host of the poker game and just going and getting more chips rather than ever squaring the books.
Right.
It's going to end badly. I hate to be right. Yeah. But, our credit quality should be just tanking. I guess the agencies were flirting with downgrading, and now they're not, because I'm sure just some political pressure.
Right.
But, you can't, it's the same as the poker thing. It's just that simple. The books are not balancing. And there's going to come a spot where the credibility drops. I think they're going to have to devalue the dollar in our lifetime. We can't support the debt service even at these low rates.
So at this stage, I would have said, if you would have asked me 2 months ago where price was, I would have said absolutely we will have a 2-term President Obama. Today I say absolutely he is a dead man walking into the last year here. Now that I
didn't even know the guy's whole name until he'd been in for a year. I couldn't, I'm the least, most apolitical person. The person I know about is Bernanke and the Fed a little bit. And this creation of they keep saying debt bubble, it gets redundant, but, the internet bubble did bust. The stock market, synthetic bubble busted.
Right.
I don't see any utility in taking risk. I'm making jokes. I don't think that I'll just do more treasuries and cover them and short more and buy them back. And I'm literally a one-trick pony again. Yeah, I spent a huge part of my career trading S&P options, and now I'm government bond trader.
And so let's bring the subject up, because this is something I've touched on quite a bit, Greg. I think that more and more people are going to go Soros on the markets and pull their money away, just like you're talking about. Equities, I left them really pretty much, besides real short trades, no longer than 2 weeks, 6 years ago.
That would be such a long-term hold for me. I got burned on Marlboro Monday.
I honestly haven't really put on a stock trade probably in 2 months. I'm kind of leaning that same way. I'm less and less interested. There's less and less volume. So your thoughts on, maybe this is the way it happens. Maybe more money, more big, smart money just says, you know what, I'm not going to play at your poker game, Dave, Ben Bernanke.
Or anybody, yeah. Well, I think that you're in a situation where, I don't know, that goes against your goal a little bit, but I mean, if it's just a trade and the market gets hit and they need to raise money, I mean, you got Paulson down, 20 something plus %. Who knows where he's at today?
Yeah. By the way, I didn't give you my risk. I didn't give you my risk on gold, but my risk on gold is we close over 17.10, that trade's over. So I'm only risking really, you're talking 3%.
No, okay. Well, it can easily, blip down to, high 14s technically. So, absolutely. You can make a couple hundred handles. So, I mean, I can't argue with a, 3-to-1, bet, 4-to-1, anything that's 4-to-1, gets my attention. But, it's just the ego of it all. And we sit around and we talk about, when I was younger and stupider, I went to pay these guys $3,000 a year to have this stupid black card so that I got my drinks faster in the bar and got treated better in the restaurant, when I showed up and with a black card because they treat you good. I mean, I think the U.S. is going to lose that good treatment. I mean, they talk about the world reserve currency issue, right. And I guess in Dubai they have machines that spit out gold. You can go to any country in the world with, this little Byzantine gold or any $2,000 and it's money. So, I don't want to sound like, I'm just preaching precious metals, but I certainly feel awful good about my, physical holdings that I started at 280 when nobody wanted to own it. Right. And, nobody wants to be short the treasuries right now. So I think that is an equally good trade. And, you just have to have enough, firepower and bullets to keep firing. Right. I'm all in right now. I mean, I'm in as big risk as I can possibly be until rates go to zero. Then I'll come and double up. Yeah. And I'll post more, more money to double up. I have enough money in the account to ride this thing to zero. And at zero, I think it's worth a new, capital infusion to that particular account to make a really big bet. And let me tell you what my concern is. If I get paid off, do I just need more gun? If I get paid off and rates go, I mean, now all of a sudden we're back to this. It's like, you need to have a sober view of this. I think that people have really underestimated because of CNBC and Warren Buffett's cheerleading. I mean, he just cheerleaded. I mean, anybody can go look this up. I'll put it on my favorites. He was just cheerleading, saying that, oh no, we've had 15 recessions and they always come out fine. And, he's talking about 12-year-olds buying houses and just literally lunacy. I mean, the guy, I mean, if he wasn't the second richest guy, he might not be after today. I don't know, somebody passed him by. But, I mean, I say that he's a more destructive force than Bernie Madoff because Bernie Madoff burnt, a few rich people. I mean, it sucks. I mean, a lot of people got taken downtown in a Ponzi scheme, but his performance was actually better for a long period of time. Right. And you're in a situation where this guy's going around telling regular people that, just dig your heels into, whatever stocks and it's going to be okay. Yeah. The 0% interest rates is going to force them into the equity market. It's going to hurt old people. That's my problem, is you're hurting 80 million baby boomers. I repeat it again and again, and it's just like, I hate to seem like, such a, moral, socially conscious person, or, like I'm some sort of crusader. When I was a broker, I tried to help people. I mean, I tried to put them in good trades. I tried to, I bought them Occidental Petroleum with a 10% dividend and, all these things that we've talked about. The stocks used to trade in 8s and people made money. Now people hold stocks for 8 seconds. I mean, the game is over. Don't talk to me about 15 data points in terms of a recession. Right. 15 data points doesn't mean anything.
So when you say the game is over, Greg, you're kind of saying the same thing that I'm saying, that, the little guy, who maybe used to buy stocks and hold them is done. He's not even coming back. And the big guy also is like you and me and saying, I am shortening my time frames more and more and more every day because I don't believe in this game and the chip structure that the table has laid for me.
Well, no, I mean, the implied odds and the pot odds nobody can pick right. I mean, unless you have really good algo. I mean, I have good algorithm stuff and I don't even want to run that stuff because I feel that the game is so rigged. I was in this VXX. I mean, I got paid off today, but I knew it was a flawed instrument. And, it didn't act right on days that it should have acted right. And today it didn't do as well as it should have. I mean, what did it go up, 5-6 points? I mean, I think the VIX was up a much larger percent. My options that I averaged in at a little under 4, I was able to get out of at basically $10. And, I sold some a little bit, we're down 44, so I legged out, let's call it $9.
Yeah.
So I ended up finally getting paid off on this bet. And, that pays for a lot of the risk that I have in the other trade. I have these two working against each other. So my cumulative risk is largely, hedged out. And, now I have more bullets to fire at the short side. So I'm going to wait. Because,
and like you have a few more bullets to buy real bullets in case that trade starts working.
I already have real bullets. I'm loaded. And when I was buying, let's not talk about that because everybody thinks I'm a prepper if you do that. I mean, I lived on that farm for years. I mean, I sat and lived small and lived up in the jungle and coming out of that $6 million house and all the, having the huge utility bills and koi pond and interior plant person for $400 a month and koi pond and pool. And now I just lease somebody. This person that's in this house now is the nicest person, but she's so stuck in this thing. She can't get out. I'll be able to lease this thing for a couple of years. I mean, it sounds stupid to spend $10,000 a month on rent, but it's over with. At least I don't have the insurance and the property taxes and the refrigerator or the pool or something breaks. I just make a phone call. Hey, somebody come over and fix this shit. It's actually cheaper.
I've been doing it for 6 years, and I agree with you. I don't feel a fool, and everybody I lease from, they're like, I'm just trying to get out of underneath it, and in a couple more years, it's all going to be back. And I just grin and bear it. I just say
the demographics do not suggest that real estate can come home. And Warren Buffett's entire premise of America's coming home is that people are going to have jobs when construction kicks back in and real estate gets better, and that's just a fantasy.
I agree. This is something that I've brought up to, again, non-market people all the time, just explaining it to them real simply. Listen, our demographics are top heavy. They're getting worse every day, every minute. For the next 30 years, we're going to be old. We're going to be in
365 people turn 65 every hour.
So here's the simple math.
They're not going to be buying houses.
And they're going to be selling, Greg. So you're going to have, not only are there not buyers, but you're going to have more sellers. And you're going to have baby boomers who were buying the big monster saying, I want to dump my McMansion for a little 2-bedroom because I don't want to clean this.
You're also going to have all the young people that went to spend all their money on student loans and college. They're going to be moving into those houses. You're going to be like in Hawaii. It's really common for 3 generations to be living underneath the same roof. I mean, they do this all the time here. I see it with my own eyes.
Yeah.
And people will not be going out on their own anymore. The American dream, I mean, the fact that you set an entire country's goal as owning a house, and you have to be asleep to have the dream work. I don't get it.
Yeah.
It's just people don't understand the absolute risk that they take. They take their money and they lose they're completely desensitized to the money. Anybody that has $100,000 left in the stock market, if I went to their house and I was just like digging around and I found a bag, they bought the house and I opened up a cupboard and there was $100,000 in cash, they'd never let me leave the front door with that cash and go buy them $100,000 with an Apple. They wouldn't do it. But they get their statement and they go, I got $100,000 to Apple. They don't care. They don't understand that they're not getting paid the right money to take the risks on a rigged system. The only way we're up here is these QEs help the stock market.
Well, but Greg,
that's what the QEs did.
Greg, Apple has more cash than the U.S. government.
Well, Apple, yeah. I mean, if there ever was a good company, I shouldn't trash Apple. They actually look really good. But, they have more cash than the government. I think I posted that. But, I look around and I just think of the game as like, I've been playing a lot of chess since online poker ended. And, I'm improving slowly. And I'm playing Silver Futurist, by the way. He's stomping me into oblivion. He's way better than me. The guy's like an expert or a grandmaster type level. But I'll learn, You want to get better, you play a better opponent. But when you look at the board, you're just pinned everywhere. There's just forks and pins, and that's why I literally, today somebody was saying, should I get into this VIX now? I said, well, now.
I'm selling. Yeah. No, I know.
Well, again, now they come to me and go, should I get in now? That's the mentality that throws me off so much.
Yeah, I've been short the S&P 1340 down. I started getting out at 1250 and
1233 was a great level to exit your shorts. And if you left a bunch of money on the table, so be it.
I bought everything but 3% of my short at 1201, and that was it. And, now people are asking me, should I get in? I'm like, you just missed the, 180 point move. Why would I tell you to get in now?
Technically I just posted it. You have great support at 1192, which we're almost on. We hit 1150.
We hit 93 on the button. That's what I was saying, 92 all day today. That was our number. Yep.
Okay, 92, and then if like I said on 85, if that cracks, we go to 1233. If that cracks, we go to 92. Now we go to 1150. At 1150, if that cracks.
Yeah, 1188 is your 50 retrace for the last 2 years. 1145 is your golden ratio, and that's for the last 2 years. You go back, if you want to take it back to the low of March of 09, you're looking at 370 points. 740 is what we've gone, basically top to bottom. 710, excuse me. So 355, that takes you down to 1,000.
I think that everybody needs to, I say this every time. I said it in 2010, the thing that's still posted on my site, that you should be, 80% in cash and be trading 20% of your money, or have 20% precious metals. I mean, it looked too high then, but it still worked out for you.
Yeah.
I saw Kramer say 20% in precious metals today. So, now I look at that gun, I want to shoot myself in the head. Here, I got this little toy lighter gun here. I'll use it. But, I hate it when any of these people agree with me.
I don't even have the Hunter S. Thompson version of CNBC in the background like you. I have a blank TV here with no cable feed into it, so I don't even do the Hunter S. Thompson version that you do anymore.
I have to look. It's just too amazing to me, the level of again, they're the same thing. It's just another Warren Buffett scam to regular people. I mean, that's the problem, is all the traders, you get beat, you place your bets. If you don't have your good money management, you go sign into the, World Poker Tournament, you spend your 10 grand. Play out your hand. You have 10 grand in the game. But, the people that, so they're taking terrible, terrible, terrible risks. A lot less risk now. If somebody wants to start buying the market at 1150, it might be a pretty decent bet.
Yeah, I think at 1150 down to 1,000, you're only talking about a 15% move, maybe somewhere in there. Yeah.
Well, you're getting paid decent lot odds to get long down at 1150. If it holds.
Right.
But the gold, I don't know. I think that this Paulson guy and a lot of the guys that are left in Wall Street that didn't lose that didn't lose their jobs. They're probably going to hit the door. Everything's down for the year now.
5%. 5%. Yep.
Is that right? I did not know that.
Yeah, we opened at 1257. So 60 points. Let's call it 5%, 5.5.
It's going to be interesting. This whole debt ceiling thing. You would have thought we got this drop into that. Instead, we were rallying. And I still think that, I don't know how long they can stretch these bonds out. I just don't see anybody that wants to lend us money when you just ran a bad poker game getting new chips.
Right.
The rest of the world doesn't want to lend us money at 0.26 or 0.27 for 2 years.
Yeah.
When we crashed in 08-09, the 2 year was trading at close to 2%. So the yield curve is going to flatten. Yeah. I had a lot of people wanted to short the 30-year at 126 and asking me. I was like, no, you can't mess with the 30-year because if the market goes down, you're going to run away.
Right.
The yield curve will flatten. The yield curve was way too steep.
Yep.
So, I've been long 30s and trading it against 10s and stuff like that. So I wish I were right now.
Yep.
That spread trade is 5,800 now. I was trading it months ago at 300. It's 5,800. So the rubber band is stretched. That's my feeling, and I think the government will just go get some more chips. But it's not the right answer.
That's all they've been doing is getting more chips and more chips.
It's not going to. The cost of borrowing as your risk increases should go up, not down.
Right.
I mean, if somebody's on wobbly pins, that's what subprime was, is the people didn't have the ability to pay back the debt. We don't have the ability to pay back the debt.
So listen, here's what I want to do. I want to end this right now, and I want to come back in the next couple days and week and talk a little bit, especially because I think trading's going to get a little slower here after this selling. We're gonna slow down a little bit, as is wise that you sold your volatility options today. I agree with that move.
Well, maybe unless we crash tomorrow, but it's just I don't need to get those last 30 handles out of the S&P. It's too risky for me.
Exactly. So what I'd like to talk about, Greg, is why you're giving up the algos, how you designed your algos. Let's talk a little bit about your setup, your mechanics, and how you did that, and why you're giving it up. And I'd also like to talk a little bit more on the subject of easy money and the easy money of the 80s and the good times, and how we've turned into the easy money Fed, and where you think we're going to go further here in the future, and more on the subject of...
Well, I'll tell you what, I leased out the Euro system to somebody for a couple of years, and they had a happy, cheerful day today. They don't care that the S&P tanked. Anybody that's trading my algo stuff that goes home flat every day, they're great. I mean, I don't have a business or a business model to sell it. I flirted with it, and I'm just not a businessman. I don't know how to keep accounts open and have minutes and do all those things. So, I don't have the skill set to be in business, but I have certainly the inventory. So maybe by appointment only, I'll be doling this stuff out. I just don't see any utility in me doing it anymore when I can just shove all my money in this bond trade and sit and wait.
Yeah.
Because I know I'm going to be right. I mean, I'm not saying like Bill Gross or Warren Buffett. I'm not saying that I'm right. I'm just early. I'm telling you right now, I'm wrong. Yeah. I got mangled. I'm falling here. Where's that knife? I'm falling on my sword. I screwed up. If I were perfect, I would have shorted it all today and started the position here.
Yeah, but, Greg, you and I have been nothing but honest about that. You've always told us when you're underwater. I've always said when we've been underwater. Again, I've got nothing.
Well, no, but on this Twitter thing, this tweet deck, every single guy is right. This McCullough guy. No matter what the market's doing, he top ticked it and bottom ticked it. He has 30 analysts. You guys got to go look at a video. And he says he's got 30 people, and he's got this one guy in the background typing like this with two fingers. I mean, I need like 70 people if they have the efficiency rate of this McCullough guy. I mean, he's always right. I mean, he cracks me up. I mean, I don't know who he is or where he came from.
Keith's a good guy. Keith's a good guy, actually. I like Keith, and he's a friend. And
I don't know. He sits around and talks about monkeys all day.
Yeah.
I don't understand half of what he says. All I know is if the market's up, he got long at the lowest print of the day. And he sold the top tick, and maybe I'm wrong. I'd love to see this guy's numbers. Well, I'll post my numbers. I'll post my tax return. I don't care. I mean, I like to deal in reality.
Yeah.
But I'd love to see a performance report of this guy's calls and see what he's done.
He's got a fund. I don't know how big his fund is right now. I know he's a former hockey player, played at Yale, was a Canadian, played...
oh, really? He might want to fight me. Shit, he's younger than me. Yeah, I still got some punch left.
He's got a few years on us. He's definitely younger, and
Well, tell him I'm sorry then. I don't want to scrap with him if he was a hockey player. Those guys are tough.
They are
I was just a simple boxer.
Thunder Bay, too, way up there in northern Ontario, man. They're tough.
All right, I hereby apologize, Keith. I take it all back. I'm afraid of Hank Paulson and Keith McCullough now. I got two people I'm afraid of. I wouldn't fight Hank Paulson. Hank Paulson scares me to death.
Hank would tear you up, I think. He's tough.
Yeah, I know. I'm afraid of Hank.
Hey, on a softer note, what did you think of did you see the Too Big to Fail HBO movie?
No,
Andrew Sorkin's book, Too Big to Fail? Andrew Ross Sorkin?
No. I've been reading fiction.
Okay.
I gave up on nonfiction. I've read something about some gorilla invisible nonfiction thing that was good.
Sounds like a Michael Crichton book, yeah.
I read, no, the gorilla thing is like they had the basketball player and then they had a gorilla run through and nobody saw it because they were counting the passes. Just the things that people don't see, how the mind tricks you. It was a cool book.
Are these the same gorillas that are related to the monkeys that Keith McCullough's
talking about? That's what I worry about. Maybe McCullough read that book too many times. But I don't know. It was good. It was good that we picked today to chat because I find myself just in a one-trick pony world, and maybe I could help some people out with the algo stuff if they, I don't know. And, hopefully it helps them. Like I said, I only suggest that people take a small amount of their capital and spin it around during the day and give themselves a fighting chance to fight the zero ray. That's always been my premise. So,
all right, Greg. So we're going to come back next week, and we're going to get back into this a little bit now that we're going to slow down a little bit here in August. I think you agree again, Mr.
Oh, yeah, I'll be around. Look, I got Kramer in the background on TV. He's telling us what happened today. I might turn on the volume. I'll see you later.
All right, man.